Welcome to week 40 of my Trading for a Living challenge, where the goal is to make over $1,000 every single week trading options, primarily selling options to bring in premium and weekly income. Now, as I mentioned in week 39, and if you are brand new, the full playlist is down below, pinned comment, and also in the description. As I mentioned, week 39, we already managed to smash the month 10 goal, where the goal for month 10 was to make $4,115, and we made $4,381. And anything I could make in week 40 was just going to be a bonus to help me crawl back the deficit that I've already got from previous weeks. Now, I also mentioned in week 39 that in week 40 was going to be the majority of my trades. I rolled some of my trades in week 39, but week 40 was the deadline because the May option expiration cycle was reaching 21 days, and I've rolled the remainder of my trades all the way out into June's expiration cycle. Now, you guys know you've been following me, and we'll go into this when you see the trades. I'm holding some trades that are not going in my favor at the moment, and therefore for me to roll those options, and what that basically means is buy those options back, trying to make those options strike prices a bit more favorable by pushing it out further in time. To do that costs me money, and therefore I've had to take some big debits on Tesla and Meta, and with all my other positions that I've got, I've crawled back some premium, and I managed to generate $427, which I knew that was going to happen, and I didn't want to open too many new trades, so I opened one more new trade for week 40 to get me over the line. So overall, we made $4,808, which again is absolutely fantastic, which is the second highest, I think. Yeah, it is the second highest compared to last month's one of 4,848. So going to monthly options, giving myself some more time and going on to margin has been the best decision for this challenge. We scroll across from a cumulative perspective. Again, we dropped slightly because when you track it on a week-on-week basis, I obviously missed the weekly goal of $1,000 and only generating 427. And cumulative tracker, again, didn't take me that long, to me quarter of an hour just to place the trades, do the rolls. And you can see now that we are just over a day and we made 38,500. And we're only 3 months away now from completing this. 9 months has already passed. So you can now see the bottom of the screen where a 9-to-5 job would have got us $53,490 and 2,080 hours to generate that. Where already, if I stop today, week 40, we've generated 38,500, and that's taken us just over a day. And you can see we're 14,000 behind, so we have to make 14,000 in the next 3 months to get us to where we need to get to. And we've got to have some pretty big months here, because I don't think we've hit a $5,000. We haven't hit a $5,000 month. And even if you do, let's do 4,808 times by 3, 14,424, 14,093. So we basically need to be doing 4.9K every single month to get anywhere close to that. So that's what we're striving towards. So make sure you like and subscribe if you want to follow me for the rest of this journey. Now, let's have a look at the trades, and we'll try and walk through this in the best detail. I've done a few trades, as you can see here, and also down here for IWM. So let's go through this one by one now for Tesla. And Tesla, again, was one of my problem childs. I've got long stock at the moment at 280, 250, which is just sitting there doing nothing. So we do have 2 short calls that we talked about last week. No, I did in week 39. So they're just chilling there, doing what they need to do, decaying quite nicely in the June expiration. But I have my inverted strangle, which is causing me a problem. So as I said, my strategy for the inverted strangle for 3 contracts is to buy back the call, and that cost me $8,000 to buy back, push my strike up by $5, and then generate some premium. So I generated 7.6K, and that was a $480 debit. And what I tried to do is then sell the put, which again is higher than my call strike, which is why I'm inverted. And I kept the same strike at the 180, and that gave me $195 of credit. So when you add it all together, that took me down as a debit of $285. And Tesla has been the stock that has produced the majority of my credit. It just didn't go in the right way where I needed to go. So the current price is 164. I need my call to expire out the money, so it needs to be higher than 164. So I'm grinding my way up there. And what I've done is I've just taken off all my other ones just to get the visibility a bit more easier so everyone can see. And again, if you are new, you can see that I've had it at 120. We're now at the 130. So we are grinding our way up. And we just need to, at some point, Tesla's price has to meet our price. It was down, and if we look at the chart, Tesla hit a low of 150. What was that? Low of 152. So it's only $20 away. So it had a nice little rally up today to it's 2.75%. So I'm recording this on Friday in week 40. About a couple of hours before the market closed. So this is my situation from a pictorial view. I've got my 200 shares. I've got my 2 short calls here, which are just chilling up there. We've still got a lot of room there. And I've got my inverted strangles, which is, it's inside its range. And ideally I need to bring my put down. So when you go inverted, what you really want your put to be out of the money. So I've got my in the money call and I've got an in the money put, but I've got $50 between it, which ideally is quite a big inversion. So what we really want, we either want Tesla to be trading here or we want Tesla to be trading here. So then I can at least do this for a smallish type of credit. And I want to, in this account, I want Tesla to drop. In my other account, I want Tesla to rise. I've got many positions on Tesla in various different accounts. So again, just managing it. I can't dictate what Tesla does. All I can do is trade what's in front of me. So that is Tesla. Meta, again, is an interesting one because I've got an additional trade on here, which we'll talk about in a second. So we've got our strangle, same thing as Tesla. Got an inversion. So I bought back the 115, sold the 120. Again, that cost me $1,000 in debit for the 2 contracts that I have. And then I sold the put side, the 185, rolled up to the 190, and then that gave me 550. So as a total, that again cost me $490 to manage this actual position. And then that was before earnings. So then again, also before earnings, I had a 170 put, which I just rolled, and that is actually meant to say May 19th. If I can do that properly, let's just change that now. So I had the May 19th 170 and I rolled it out to the June expiration. So I got 210. So you take all of that, that got me to minus 280. But then Meta's earnings came out, and then you can see here that 190 that I sold for 474 when Meta jumped up to, what's Meta trading at now? Meta's trade, look at that massive jump up there. It's trading at 239. Where that left me was I was able to buy back that 170 put that I sold for $474. I was able to buy that back for $33 per contract. So that was $66. So I made $408 in a day. And then I decided to roll this up from the 170 to 190 to bring in an additional $118. So I did 2 kind of trades on week 40, which is a good thing. Stock went in my position from a put perspective, and that reduced my deficit to 162. So if we look at everything I did from Tesla and Meta, that took me to a debit of $447. So I made $427 positive. So all the other trades that we're going to go through were around $800 to counteract these 2 positions. But I have improved my positions for Meta and Tesla. So again, if we have a look at Meta's perspective, Meta's slightly different because we do have my cost basis is around the 140 mark. So I'm not too far away on 510. I'm about 4 months away of getting out of this position, assuming I don't get early assigned. And it's just coincidence that I've got the 190 for the put side for the strangle, and then I rolled up from 170 to 190 for the put. So I've got 4 contracts sitting at 190, but I've spread them out in terms of what each trade is from an illustration perspective. And then this is the gap from the first earnings, and this is the gap from the second earnings, and it just keeps going up. I don't even know what to say anymore. So if we have a look at the next stock, that is Coinbase. So Coinbase we talked about last week, where we rolled 8 puts and we kept the same strike at $45. And then I rolled down some of my calls from 115 to 90 and 110 to 95. They gave me a nice bit of credit of $549. So if you have a look at Coinbase, it's trading in a range now where you can see this. So you've got the highs up here, and it's again touching its lows. It's down 1.24%, and it is oversold at the moment. So hopefully we get a move back here, staying way clear of my $45 put strike for 8 contracts. I've got the opportunity to bring these calls down a bit more to generate some more premium, but we shall see. I don't really want to touch Coinbase for the rest of this cycle if I can avoid it. But it's been a good stock to me to make premium because of the volatility it's having, and because it's trading in a range. It has made it very easy to trade in this position. Google, we've not done anything with. I've smashed it both on top and bottom line. And again, it is flirting now again with its highs up here. And again, we've got the 95 put here. So, we've got, I can do this properly. We've got this situation where it could fiddle out here or break up to the upside. And that's what we wanted to do with this. We wanted to break up to the upside, all kind of retrace down. It doesn't matter. Right? This 95 put, I'm not worried about it whatsoever. I could play this more aggressive and move this up to the 100 to this pivot level where it might jump to, or just keep it underneath the pivot level at around 98. So I have some options there with Google. IWM is where we did a new trade, very similar, did the same strangle before, where we had the 162, 188. We've now got the 162, 184. And IWM is the Russell 2000 index. And yeah, like I said, it's been really tight inside this range. I think this is a 20 delta strangle. I'm fairly comfortable with this. I've got no problem with this, and I'll just manage and roll up or down. And again, I've got the ability to roll to the 168 if I feel we're going to be tested to the outside, or to generate a little bit more premium from there. And then Mara again has earnings next week, I believe. We are right up here at the 22.5. It's had a bit of momentum, pretty much flat for the day. It has to still take out this high, and it's got all of this room it needs to do. Fairly comfortable with this, and I've got the ability to roll this down if I need to. So I'm just going to see what happens on earnings. If it tanks on earnings, I'll be rolling this down for a nice little credit there in the same cycle. And again, fairly comfortable, not really challenged by this one whatsoever. So again, the one new trade for our IWM, and just so we can confirm, we're at 41%, a bit on the high side, but like I said, I'm comfortable with where everything is. It's Tesla and Meta that are causing me a bit of problems at the moment. These need to start being revenue generating for me if I'm going to have any chance to crawl back this 14k, because there's, depending on what happens, all the open positions I have, there's not much I can really do to generate enough to generate $4,000 in a month. So I'll either have to open new positions, and then I also have to manage the positions I've got open. We are where we are with it, but I'm fairly comfortable with where things are. So make sure you like, subscribe, comment down below, and I shall see you guys in the next video.